Welcome to elearnmarkets.com. My name is Abhijit Paul, and today I'll walk you through the study of technical analysis for commodity markets. In the first section, we'll focus on philosophy of technical analysis. Philosophy of technical analysis, in this section, our main objective is to understand the basis of the subject, and we'll be in a position to differentiate between the conventional fundamental analysis and how the conventional fundamental analysis is different from the study of technicals. So what is technical analysis? If I put it in just one single line, it should say that technical analysis is the study of past market data, mainly price and volume. Now let's understand what is past market data. For this, I will take you to an Excel sheet. The sheet over here that is there is that of historical data of gold which are traded in the MCX exchange. As you can see, I have few columns: date, open, high, low, close are the four attributes of price. And I have past historical data, that is, I have data from May 2011 all the way down till September 2016. So what is there in front of us is historical data, dates, price, and then volume. Volume essentially is the number of shares exchanged hands. Now if I have this historical data, and let's say if I select a part of it and I ask Excel to plot a chart, it will plot something like this: four graphs, four lines representing the four attributes of price. However, if I just take it down to close, that is just only one attribute, what do I get? I get a two-dimensional chart. On one axis I have time, and on the other axis I have price, and this blue line is joining all the closing prices. This, my friend, is a chart, and the work of a chartist or a technical analyst or a technical trader is to look into this chart, analyze it, and come out with a probabilistic recommendation, suggestion of the future direction of that asset class. So that was past market data, and as we saw, that past market data had two main functions of price and volume. Price is made up of open, high, low, and close, of which close is the most important price point. Volumes, as we said, is the number of shares exchanged hands. Now from that Excel sheet, how will a chart look like in a professional software? Over here I have the chart of gold which is traded in MCX. This is a daily chart, and this is a line chart, as you can see, plotting the closes, and the histogram on the red on the bottom are the volumes. Now moving ahead, we need to understand the basic principles of technical analysis. First things first, the cornerstone philosophy is market action discounts everything. Now this is one aspect of technical analysis that everyone needs to understand, accept, before he or she takes the next step towards understanding technical analysis. Market action means price, the action of price. Discounts everything means whatever factors, elements that affect the movement of price is already factored in. Let me try to explain this with the same gold chart here. As we can see that the price of gold currently is around 30,900, and let's say that over the next few weeks or months the price comes down to around 28,500 or more. We are not suggesting that it's going to come down, but let's say if it comes down, or let's say it goes up to 33,000 or 35,000 on the upside. What the first cornerstone philosophy of technical analysis says that price discounts everything means that at the current price, the market has discounted all the factors, and if you have a big fall or a big rise, it's not because of the current news, it's because of the future news that is going to hit the street later. So let's say we choose that gold prices go up. Let's say for the time being we choose that over the next few months or few weeks, the prices of gold has shot up. Now, what the technical analyst tries to say is, do not try to justify the movement of the price based on the news. If it is going up, then surely it is discounting some future event, some future news which is going to be positive for the asset class gold. The same logic applies on the downside. Prices tend to move in trends. Trends is an extremely important aspect for any technical trader, because trends are the zone where a technical trader makes the maximum profit. Having said that, let's go back to our old chart of gold. Let me show you few aspects of technical analysis which is quite fascinating. The chart in front of you is that of gold with volumes, and it's the daily chart. The periodicity, as you can see here, is the daily chart. It means that we have joined the closes of each and every day's close. We can change the horizontal axis, the time axis, from day, we can increase it to week. Now we are joining the closing prices of every week. We can move forward and increase further to month, quarter, and yearly. So from a very larger time frame to a very smaller time frame, as long as we have historical price data, we can represent it in the form of a chart. Now, if you notice the daily chart, observe it for a few seconds. And now I'll increase from the daily to the weekly chart. Observe this for a few seconds more. And let's say we do this one more time for the monthly chart. You will notice that one important common aspect of all these three different time frames are existence of trends. Uptrend, a steady drift of the prices going up, and downtrend, which is a steady drift of prices coming down. This ebb and flow of prices leads to trading ranges and trends on the upside as well as the downside, and this existence of trends is there in a shorter time frame as well as a larger, longer time frame. And this is the second principle of technical analysis, that prices tend to move in trends. These trends or prices are solely determined by demand and supply. Now, the fact that at the current juncture the prices of gold is flat, essentially not much significant trend, but few weeks, few months back we could see a steady drift on the upside. When we have a steady drift on the upside, we can make an assumption that the willingness to pay for gold, the willingness to buy and pay a price for gold is getting on the higher side, and that's why people are bidding for a higher price, trades are getting done at a higher rate, and we see a steady drift on the upside, essentially demand more than supply. On the other hand, when we have a steady drift on the downside like this, people are not too keen on buying. On the other hand, those who are willing to sell do not mind to sell at a lower price. So they are quoting a lower price to exit their positions, and so the drift on the downside. So demand and supply are the two main factors which drive the prices up or down. And if we have a stage where we do not have any significant drift, like probably the case at the current juncture, then we may say that either party is not too willing to buy or to sell. When the willingness comes, we will have a trend for sure. On the upside if the demand is more, or on the downside if the supply is relatively more. So demand and supply plays the most important factors, and it's because of this tug of war between demand and supply we get the trends, and these trends are evident in all the time frames. The fourth principle of technical analysis is history repeats itself. As you can see in any chart of gold or any other asset class, you would find that there is some degree of cyclicality, that prices tend to rally, correct, halt, rally, correct, and it goes on. So history tends to repeat itself, and various asset classes, various markets have their own cycles which uncannily tends to repeat year after year. So, are we in a position to answer what is technical analysis? Well, technical analysis is the study of markets action, science of recording in graphic form the actual history of trading. So if you recall the Excel sheet that we saw some time back, it was a science of recording. We had recorded the data and we showed the data in form of a chart, and now what we are trying to do is analyze that chart. In that chart, in a very primitive manner, primarily the two attributes that we have are price and volume, and it's mainly demand and supply that pushes prices up or pulls prices down. This demand and supply creates the trends on the upside or on the downside. We record this data, we represent this data, and the work of a technical analyst is to analyze this data. Well, then so far we have seen what is technical analysis, how is a chart constructed, what goes inside the chart, the two primary factors of price and volume. So a chartist or a technical analyst looks into a picture, but there are various other ways of analyzing any asset class or any commodity. The very conventional way is that of the fundamental analysis. Let's try and understand what is fundamental analysis and how is it different from that of technical analysis. So then let's understand what is fundamental analysis. Now fundamental analysis will be different for a different asset class. If you are analyzing a stock market or any share, then the fundamental analysis for that stock will be very different from that of fundamentally understanding any commodity like gold or copper. And the analysis that goes behind understanding currency pairs or government bonds will again be different. So unlike technical analysis, fundamental analysis will differ from asset to asset. One factor, a very important factor that goes into fundamental analysis for commodities will be global market conditions. How is the globe paced right now? Is it going through a boom, a bust, depression, recession? Let's look into a recent, over the last 10 to 15 years, what has happened to globe. India and China, two being the biggest populous countries, have been importing various necessary commodities, and that has an impact on the prices of commodities. The demand from India and China for commodities, necessary commodities, has been on the higher side, and that has led to changes in prices. There can be physical and political disruptions also. Let's say you're talking about gold, where the country may have, and let's say the country is one of the biggest exporter of gold, and there are many mines, and that country is probably going through some kind of a political disruption. So that will definitely have an effect on the supply of gold, and as the demand and supply changes, the prices definitely will go through an impact. What about future substitutes? The commodity that we are talking about, that we are interested in, does it have a threat of some kind of a future substitute? Does crude has a future substitute which, if it sees the day of light, can impact the prices? Policies, these can be political policies, these can be government policies, monetary policy, and these policies can affect the production, the mining of the particular commodity, and again the same thing can affect in the final price. Socio-economic factors, how is the society placed? Does the, let's say, the Indian society looks into gold as an important metal. So we are an importer of gold. We also use gold as jewelry. So we have a tendency to have a high demand towards gold. So what is the socio-economic factors in that particular country which affects either the demand or the supply of that particular commodity? This is not a very exhaustive list. Depending on that particular commodity, the factors that goes for gold will be very different from that of copper. So depending on the particular commodity, there will be different factors for understanding that commodity fundamentally. All right, so this brings us to the end of the first section, which was philosophy of technical analysis. We have understood few things. First, what is technical analysis? We have past historical data, we have collected them, we have recorded them, we have represented them in the form of a chart, and now the work of a technical analysis is to analyze this chart. Demand and supply are the two most important factors that goes into technical analysis, and it's this demand and supply that leads to the uptrend, demand more than supply, the downtrend, supply more than demand. This supply more than demand, demand more than supply game is seen across all time frames, from a very shorter time frame like the daily and intraday charts to a very long term time frame like the monthly or the yearly charts. What is technical analysis vis-a-vis what is fundamental analysis? Technical analysis is more about the price, the demand and supply, and fundamental analysis is more about the commodity, various factors that goes into determining the demand and supply of that commodity at that point of time. So this was the end of chapter 1. In chapter 2, we'll move ahead and look into other aspects of technical analysis as a school of thought, as a subject which helps us to track and understand various asset classes. Thank you.